Trying to understand the eminence of real world assets and the DeFi world? Then you are welcome to Link to the Chain, a podcast brought to you by Vsauce. It is designed to help you understand the happenings of decentralized finance along with real world assets. I am your host, Nikki from Vsauce. I will be inviting experts from the Web3 industry to share with you their experiences and ideologies on RWAs and the DeFi world.
Well, I'm pleased to be joined today by Erbil Karaman, co-founder and CEO of Huma Finance. Erbil, can you tell us about yourself, how and why you started Huma, and what it's all about?
Sure. First of all, thank you so much, Nikki, for having me today. I'm a serial entrepreneur and a technologist in a nutshell. After a few successful consumer startups, I joined Facebook to lead the 1 billion project. Basically, how do we bring Facebook to 1 billion people? I know it sounds a bit stupid today, given that, Facebook or, the new brand name Meta has more than 3 billion users. But back then, it seemed like an impossible mission. And after delivering that successfully, I've then co-founded one of the most ambitious projects, again, within Facebook, internet.org. We were trying to figure out how do we bring affordable internet to everyone in the world. At the time, we realized that, many places, especially emerging markets, still do not have access to internet. We tried solving that in many different ways and succeeded and, failed in different ways as well. After Facebook, I joined the leadership team at Lyft, one of the leading ride-sharing companies in the US, and led the growth initiatives as well as the consumer products and platforms to a successful IPO. And at last, I was the chief product officer at Earnin. It was one of the most successful consumer fintechs in the US. It probably still is from a business perspective. And that's where I met my co-founders, Richard and G. Richard was the CTO, and G was the head of risk engineering and machine learning at Earnin. And Earnin was born as a reaction to the predatory payday loans in the US. A lot of people were still struggling, even though US is considered a developed market. A lot of people are outside of that financial ecosystem and they're not served, and they were kind of hunted by the payday loan providers because nobody wanted to serve them. And we built a system where we did not require people to have, credit scores. We did not have any interest, and we did not have any recourse. So we didn't, do any collections if people failed to pay. And we still provided them a very simple cash advance solution through a very simple mobile app. And we originated more than $15 billion in cash advances with less than 1% loss rate. So, people were amazed in how we did that. And a lot of our expertise from, what we have built at Earnin and the success there kind of became the inspiration for Huma. Here we are with Huma, the income-backed DeFi protocol for 99%.
Wow, what a laundry list of big names in the tech industry. So yeah, you're right. You're definitely a tech veteran. How has the founding team been a big part of forming this Huma Finance company? It looks like they also have an extensive experience. Can you tell us about the inspiration behind starting and what motivated you and the co-founder to pursue this venture?
Totally. It's very similar to what we have seen at Earnin and what we try to do to kind of create an alternative to the payday loan businesses. Just like flip everything around, right? If everybody's treating people just a financial transaction, right? You need to think about it from the perspective of, okay, how do I actually build a system where people feel like they're part of a community, a service, and they are providing actually an important input into that service. So we have designed every way in such different terms that nobody in the financial industry was used to. And we also understood that you can't judge people just based on the simple credit score, right? And there are better ways to actually figure out what is the most sustainable financing that you can provide to anybody. And we knew that people might not have best credit scores, people might not have a lot of assets, but everybody has income, right? And people around the world and the business around the world, they all have income. And if you understand this income deeply, if you understand the qualities of income, then you can figure out, okay, how much can this business or person afford to borrow, and how do I actually create a system where they become a responsible borrower, instead of pushing people to borrow more and more and increase the interest rate, and then eventually get them to default or fail. We decided to not have an interest rate because we wanted to create a system where we blamed ourselves if people fail to pay, right? So it was on us to figure out, what is the most sustainable and the responsible way of borrowing, and how do we incentivize this kind of behavior, and how do we incentivize also people to help each other. So we have built some systems, for the community to help each other when they need capital, or when they need to, get a cash advance. And when you actually enhance that perspective and look at what's happening in the world, you actually see things happening at a larger scale, but stem from the same type of problems. You have an unmet financing need in trillions of dollars and continuously growing emerging markets, and it's not being solved as much as we know by any party. And the whole promise of crypto was actually to bank the unbanked, and where are we right now, right? Like, we largely failed to achieve it so far, and both crypto and DeFi is still quite inaccessible, and the services are very limited. And to be honest, these people have been seen as like retail token traders to dump some tokens onto. Like, that's how we treated this audience so far. And also, the most important underwriting primitive you have in traditional finance, right? When you want to get a mortgage, when you want to get a car loan, business loan, the underwriter first looks at your income, first looks at your revenue. And if your income is matching your borrowing capacity, and if your revenue is matching your payback capacity, then you're actually given a financial service. And this kind of primitive doesn't exist in DeFi underwriting, right? No DeFi protocol uses this kind of a primitive. And being exposed in this income-based financing systems, coming from our fintech, we saw a calling to build that missing infrastructure, and that's how we kind of got started on Huma. We also realized that the majority of the private financing solutions in the emerging markets are very predatory still and very opaque, and we believe with higher transparency and efficiency that DeFi brings, and with shared ownership models that DeFi enables, we can build much better financial services.
Wow. That was a really great explanation. And it looks like you also answered one of my other questions. So what I took away from that was, I love how you guys are including the 99% essentially, right? So you're banking the unbanked, you're giving that 99% access to this type of technology and to be able to enter the Web3 DeFi RWA world. It's a really interesting method for mass adoption, which I totally respect. And I love that you guys are changing that status quo with community incentives. Can you provide an overview of Huma's finance business model and how that fits into the DeFi ecosystem, with a focus particularly on the income-backed lending for that 99%?
Sure. So I would say our business model, you need to think about business models and obviously DeFi different than SaaS business model. So in our case, our business model is largely based on enabling the largest and most liquid asset-backed financial services marketplace. Our success is highly tied to that. The larger and the more liquid this asset-backed financial service marketplace is, the more successful our business, which is our protocol, because our goal is to fully decentralize the protocol and create a shared ownership of the protocol. And success of the protocol will come from how successful the assets are, and how liquid the protocol is in general, and how good it is to actually create real world utility, because that utility will translate into higher activity and an ecosystem that's going to have great loyalty and great long-term success. So we're thinking about in a very long-term, from a very long-term perspective. And the main asset class we focus on is the income, or you can call it receivables, because receivables are actually one of the best asset classes to underwrite. It's quite heterogeneous, but still it doesn't have too many geo-dependencies. So you can actually create a global receivables-backed underwriting system with enough customization built in for different use cases and different geos. But you can actually achieve this at a global scale. So I think as an asset class, income and receivables are great. It's already $1 trillion asset class, in the traditional finance, but also it's an asset class where the markets are very private, right? If you think about receivables back, financing, it's a very private credit industry, and all of these transactions are very private and very much, high overhead. And we believe with better transparency and more efficiency, this can be an even bigger ecosystem in the world of DeFi.
Yeah, I appreciate having that long-term mindset. And I was curious, is there a minimum income or maximum income for someone to be able to join the platform?
There is none, because the way actually Huma protocol is built is that we are not the lender. We're working with lenders or underwriters who utilize our protocol to underwrite these different type of income-backed loans, and a invoice factoring solution might have a different minimum or maximum compared to a small business loan product compared to a remittance financing product. So it depends on the use case. So as a protocol, we don't impose those minimums or maximums, but the protocol, when it's built into a solution by a finance developer or lending developer, have all these configurations built in so they can basically configure whatever makes sense for the use case.
Ooh, all right. That's a perfect segue. Speaking about developers, for those who want to build on Huma Finance, what type of advice would you give them, and what areas of focus do you see as most promising?
We usually like to work with developers who understand and empathize with their audience really well, right? So when you look at the best financial services that are built in the world today, they're actually built by people who are already part of their ecosystem, right? Some of the best small business financing services are actually built by small businesses themselves, or the small business unions or consortiums themselves. We are seeing more success when the developer actually really understands the audience they want to serve and empathize with them, because then they will build the most fair and the most affordable service for that audience, versus seeing this again just as a transaction, and will be much more willing to actually share ownership with that audience, and will be much more willing to actually be transparent with that audience, because some of the problems that we see in finance again always comes from this lack of transparency and opacity, and all these hidden things that can come and hunt the borrower. So there's this mismatch in terms of the power dynamic of the borrower and lender. So we're always looking for developers who are trying to level themselves with the borrower side. Otherwise, we also like to see people who have actually experience in underwriting, because financing is not an easy business, and underwriting requires expertise. And right now, most of the developers we work with are experts in underwriting a specific type of audience or asset class. We are also working with payment solutions. So we love to work with on-chain payment solutions who want to actually build embedded financing solutions. Request Finance is one of them. They are one of the largest invoice platforms in Web3, and they are building an embedded, factoring solution on the Huma protocol that's going to work, seamlessly all through the Request Finance interface. So those are some of the platforms we like to work with, because they understand the ecosystem. They have all the data that they need to actually help facilitate this kind of lending solutions. And we like to actually see Huma used more as an embedded solution, where the user doesn't necessarily need to learn yet another interface and another way of using another DeFi service. They can utilize it from the convenience of the tool that they already know.
Yeah, I agree with being empathic, especially when it comes to sales. And it doesn't matter what you're selling or what type of service you're offering. I believe empathy is super important, as well as being intentional, like you mentioned, with who you are trying to serve in the industry, who your clients are, and understanding, really listening to what it is that they need, and being that solution, being that bridge to get to where they want, and just pretty much framing it in a way that they can understand, like, hey, I can trust you, and yeah, I want to contribute to whatever service you're offering. So I'm glad that you mentioned that. I think a lot of people in business may not really incorporate empathy in that way. They might just be thinking about the dollar signs and I think
Exactly.
that's and I definitely think that's a script that needs to be flipped, especially with Web3, right, where the main focus is transparency, transparency, transparency. So I really appreciate that you mentioned that. What do you think is the most important element of a successful real world asset or DeFi product?
Maybe we can answer this building up on the previous, commentary that you just made. I think it makes so much sense because, we need to flip the script. So maybe let's talk about two examples that are building on Huma that I see as the element of, very successful RWA DeFi products. So one of them is Gia.xyz. I think you also are familiar with this specific service and platform I'm talking about. So Gia team actually comes from Tala. They were the leadership team at Tala, which is one of the most successful micro lending solutions in emerging markets. And Gia actually also has its roots from a type of problem that they have seen providing services at Tala, where they were able to scale micro lending solutions from a very small micro community based service to a much larger scale service using a smartphone, right? So they're basically introducing a mobile app based system, knowing that everybody has a phone in that ecosystem and using the phone as the basis of underwriting. They were able to scale this very well. But what they realized is while they scaled the service, right, it's become more and more transactionalized, and every single person they were serving was becoming more and more of a number on the dashboard. And with that, people start feeling like they're interacting with a mobile app, and who cares if they defaulted on a mobile app, because there was again no transparency between how the value system was actually shared. And they thought about like how can we actually create a system where the borrower is also the owner of the platform, right? Like why do we have to have this duality between the lender and the borrower? Like what if actually we create this system where borrower can also turn into a lender, or borrower can actually turn into a shareholder of the platform? Because if they are responsible borrower, and if they're borrowing, if they're bringing other responsible borrowers into the ecosystem, that actually creates a much healthier lending ecosystem. So they actually started Gia with that promise, and they realized DeFi gives them the ability actually to create a shared ownership economy where each borrower, which is a small business in Kenya or Philippines, every time they borrow and pay back successfully, they are getting tokens from the Gia ecosystem. And that's great because it flips the model, right? Like the tokens have been focused in DeFi more on the lender side and liquidity side so far, but they're kind of focusing on actually having, giving good borrowers those tokens, and those tokens increase when they also bring other responsible borrowers to the ecosystem. And those tokens are also used to stick against the next borrowing, which actually helps them both protect against that borrowing activity, creates a lower risk lending activity, which means they can lower the price of borrowing. So it's actually good for the borrower at the end, and creates more and more security, and creates this kind of co-ownership model where the borrowers also, whenever they have some spare capital, is incentivized to provide that into the ecosystem, not because they get the best interest, but because they see how it helps everybody else and how it helps themselves when they need it. So it's like, again, very different shared ownership model where it's not thinking about the borrower as like the person to get the highest interest transaction from. It's thinking about borrower as a responsible participant who is also bringing other responsible participants and creating a safer and lower risk portfolio overall, which is again at the end benefiting everybody participating. So it's, I think, an incredible way of building a successful RWA DeFi product using all the critical elements of DeFi. And another one is ARF.one that's also building on Huma. As you know, remittances are one of the most used financial products. People need to send money across borders, and I'm like that. I'm originally from Turkey. I have most of my family in Turkey, and I've been sending money back to Turkey. A lot of people who work abroad to send money to their families and loved ones, and cross-border payments and remittances is especially in emerging markets, is a huge business, but also it's a huge need. Yet it's still very expensive to send these. And there are multiple reasons why it's expensive. Because first of all, there are multiple parties involved in sending remittances, right? You go into remittance shop, you give them cash, but then they need to figure out how to pre-fund the receiver party or the receiver retail for them to disperse the money in that receiving country. And wire transactions don't work. You can't do wire transaction for each remittance. So you need to figure out how to pre-fund different accounts in different countries. It's very cost inefficient and operationally very high overhead. And these businesses are also low margin businesses, and things don't get settled. When it doesn't get settled, the receiver actually doesn't receive their money in time, and they might need to go into debt because they haven't received their money in time. So there's just so many problems at every single layer. So ARF actually has built a USDC based settlement layer for all of these remittance businesses. So instead of using fiat and fiat rails, they're just settling instantly on USDC. However, to be able to also serve and solve the pre-funding requirement, they built ARF Credit. And ARF Credit creates a system where anytime a remittance payment order is sent, it instantly creates a credit line to borrow against that's backed by that receivable, which is the remittance payment order. And that is settled in 1 to 6 days. And they have been able to grow that to more than $100 million of loan volume with using only a $5 million of a facility on chain with 0 defaults to date. It's like mind-blowing, right? And it happened like in less than 6 months. And we're so excited because, again, it's utilizing all the critical elements of DeFi, but it's solving a very important problem in the world that's, again, creating a better cost efficient structure that's lowering the cost of sending remittances for the end user, but also making it instant. So we're like very excited about these two projects. I can go on and on, but as you can see, the main theme is like find a real problem that has benefits, right? When you solve it utilizing the DeFi rails or the blockchain based ecosystems, and when you bring the transparency, when you bring the receivable on chain, you're able to borrow against them instead of, again, just mimicking or mirroring the same private capital deals that we do in traditional finance.
Yeah, I believe that whenever you mentioned community incentives and rewards, I think that's the best type of marketing, and word of mouth is also a big part of that to, onboard more trustworthy people. And it kind of goes back to like how it is in today's society, right? Like, how do you get customers to come back to your, like there's a billion coffee shops, right? How do you get them to come back to your coffee shop? Is it the people? It's probably the people, right? Is it also that you offer rewards? It's probably that too. So when you can leverage the little things like that and they can see that you're really trying to have their best interest in mind, I believe that also goes back to a really great, important element of creating a successful product in this space. So thank you for giving like a really nice deep dive on that question. And let's see, moving on, does Huma Finance differentiate itself from other protocols in the real world assets like Centrifuge and Goldfinch?
Yeah, I would say Huma is quite different. Obviously, we love Centrifuge, and they are the pioneer in the RWA in general, and they have done a lot for the industry by especially through MakerDAO, make it very public in terms of the challenges they've gone through, structures they have put in together, and the way they approach these problems. And we have many friends and investors from that ecosystem. And Goldfinch, similarly, we love what they have done. But maybe in some ways, what they have done was to take a system that exists in traditional finance and mirror it in DeFi, right? So you have these, private capital deals. You don't change the structure of the deal. You don't change the structure of how that financing is done. You just create a mirroring object in DeFi. So in a way, it is powerful because it still, creates a link between real world and the DeFi capital markets. But I think where we see the potential is actually going much deeper than that. And that's why we like to think ourselves as a full stack protocol, right? We have applications being built on Huma. We have lending solutions being built on Huma versus being a lending pool. Like lending pool is one of the components of the platform, but it's no way the most important component. And the second thing is, our focus is again strictly on the income-backed lending and the receivables-backed assets. And we strongly believe in making these private deals right? When you go on any of these RWA products today, that you don't necessarily see anything about the deal other than the deal terms, right? But what are you backing? Like what is it that you're backing? And how are those portfolios performing? All you have usually is some updates in terms of interest payments. Are they making interest payments on time? And maybe if you're lucky, you get some updates from the company, very high level, every quarter. What we have done is we're actually bringing all these receivables on chain, right? All these assets being underwritten is brought on chain. You can actually trace the performance of these assets. You can trace if the actual receivables that these businesses are actually distributing are being borrowed and paid for. And that also makes our focus lots more on the shorter midterm type of lending activity and lending products. That's because we also believe that's a better fit to the DeFi ecosystem versus very long tail type of private deals. And also by being a protocol, we're able to create these systems where GI can actually build a token model that creates a shared ownership structure, which is not very possible to do with some of the other models where there are already predetermined tokens that are utilized to, let's say, create incentives for the liquidity providers, right? So in a way, by being this protocol layer versus being the service orchestrator at the lending pool level, we're trying to create maybe more opportunities for developers to come and build the lending solution the way they want to build it, instead of us determining exactly how they should look like.
So you're giving them that freedom to kind of play in the sandbox, so to speak.
Totally.
Amazing. And I want to know, what is the key point to accelerate the development of RWAs and DeFi in the industry, and what needs to be added, I guess, to complete, and what is lacking in the entire ecosystem?
Maybe instead of like providing a detailed list of what's lacking, because there are many, I'll refer back to your previous point. Just like a great lending business, I think requires great people behind that business with great intentions. Same thing can be said for RWA DeFi, that we need more great people with great intentions, with maybe differentiate expertise to come and experiment with and build solutions, right? So I think it's still very early on for RWA, for all of us, even though I don't like the term. There's nothing better to describe, the ecosystem we are in. But especially, what your team is doing, I love, Bezos' approach, creating, I think, another missing infrastructure piece. We just need more of that. We just need more of that. We just need more of those people who understand the needs in the real world, but also have the maybe technical chops and the vision, right, to build it differently, and maybe some courage as well, because it's not easy, right? We're dealing with so many things, all the way from utilizing new technologies, trying to convince two sides of the ecosystem, trying to bring right participants in initially, trying to operate in a complex and unclear regulatory ecosystem. So there's just so much that we need to deal with, but a little bit of courage and the right intentions, I think, goes a long way.
Yes, 1,000%. And it kind of brings me back to a quote that I heard over the weekend, actually. And it was, "Your vibe attracts your tribe." So I think,
I love it.
yeah, feel free to use it. I think it is a really important component to building a successful company and team, like you said. So it is all about, it's not just about hiring the smartest person who has no empathy, right? I think you have to have the perfect balance to be charismatic. And this also goes to a quote that I heard from Vanessa Van Edwards. And she goes, "The perfect balance for a charismatic person is competence and warmth." So having both the brain and the empathy and the feelings to help create something to be long-term successful, I think that really goes down to that perfect balance of, once again, competence and warmth. So we need to spread more of that, instead of just being, oh, wow, you have a long list of like degrees, but yet you're not a nice person. So I think we definitely need to spread more kindness, as well as education. So yeah,
That's right,
thank you
and I think
for.
it's even more important for us, to be honest. Participant of the blockchain DeFi ecosystem. It's even more important for us because we have to carry the utmost standards, not just for ourselves, right? For all of our partners and everybody we're interacting with in the ecosystem. Already, I think has the bad rap in the circles that maybe also has incentive to give it a bad rap, but I think we have even more of a responsibility to not just bring the best intentions ourselves, but make sure that we're watching out for the whole ecosystem, and we're only working with the partners and enabling and pushing the partners that carry the same type of intentions.
Exactly. I love that. I want to also know, what are some of the biggest challenges that Huma Finance is facing in achieving its vision, and how do you plan to address them?
Good question. I think part of it is just it's really very early for the whole ecosystem, especially also for us. Like we literally started last year at Ep8 Denver. We were the participant at the hackathon at Ep8 Denver, and we were the DeFi track winner with Huma Finance. And we only been around for a year, and we are lucky to have a great team and great partners. With every partner, we're trying to recreate a major financial service industry, from scratch. So that by itself is like a big undertaking. And we were maybe initially thinking that if we had a few partners our first year, we would be lucky. But thankfully, we have way more than that, and we're just struggling to stretch ourselves and our team, which is a lean team, to make sure that we are serving every single partner a white glove experience, and their solutions are ready, able to serve millions in need, not billions eventually. So that's been a challenge. Just like the team is very experienced, but in a small team, and we have so many partners who want to utilize our platform and build on it, and we're trying to scale that, doing more documentation, building more standards, solutions, and templates. So there's just a lot of work for us to do to create a more scalable platform where it's a bit more self-serve. I think that's going to continue to be a challenge because we don't want anybody to come and just like build something that already exists, in the world just as is. We always, push our partners to go, 1 mile further and provide a better solution that's more fair, more accessible, more transparent, shares the ownership even more. So like we are always pushing our partners with maybe a few of those coming online this quarter and next. It will actually help us also bring on the right type of partners going forward as well, and maybe lower the burden of onboarding each one of them. But I would say, yeah, the biggest challenge is just we have way more than partnership demand that we can address, and just trying to stretch to make everyone happy.
Wow. Yes, I'm definitely feeling that love all the way over here. And it must be a really great, lean, but amazing, incredible team over at Huma Finance. And speaking of that, could you share any insights into the roadmap? Any milestones, initiatives, updates, or projects that you guys are working on currently?
Sure. I think the most exciting ones are both Gia.xyz and also ARF.one's new credit product are launching this quarter, and they will, for the first time, showcase what a transparent receivable-backed credit solution can look like online. And I think it's just going to be mind-blowing, and we're so excited to get those products live, and they're going to be extremely capital efficient as well from the perspective of what you can do with a small facility. So those are the ones that we're so excited about. And then we're also designing our next version of our protocol, Huma V2. As we start working with the initial partners, we realized there are just like a lot of things that we haven't built into V1, just to get the V1 out as quickly as possible and get these products into the world. So that's going to be probably in the second half of the year. We will announce the V2 features, and there's going to be some great features for partners, great features for the liquidity participants. So we're excited about that as well.
Wow, congratulations on everything that y'all have already achieved. And thank you again, Erbil, for your time, for joining us today, sharing your insights on Huma Finance. It looks like that we learned a lot about the company's mission to provide income-backed DeFi lending for the 99%, the target users, its roadmap for the future, and we also gained some valuable insights into the challenges and opportunities facing the DeFi ecosystem. I hope that we can keep in touch, and just can't wait to see what else you guys tackle in this ever-changing, exciting industry of Web3.
Thank you, Nikki. I mean, this has been a great conversation. And I have to say, we're also so excited about partnering with, Bezos. So I'm looking forward to figuring out all the details in our, next set of conversations. So thank you for having me. Thank you for being a great partner.
With this, we come to the end of the episode. To our audience, thank you for listening. If you enjoyed what we are discussing about the RWA and DeFi world, please don't forget to subscribe to Link to the Chain and share it with others. To catch all the latest from us, you can follow our Instagram and Twitter at Link to the Chain. Looking forward to sharing with you guys the next episode. Stay tuned.